We are live with Arjun Saraf. Sorry, Arjun. I'm just looking over here to make sure the recording is capturing the audio, and it is capturing the audio. So we are good to go. We are good to go. I don't want to speak for an hour and say, hey, what did we do? But yeah, you're pointing to the sticker on my laptop, which is like a Bitcoin sticker. And we were just talking how I completely dismissed this thing.
Right.
Not only did I dismiss it, like I laughed at it. I was like, this is completely ridiculous. I'm a tech guy. Listen, I'm a tech guy. You know, I was like, hey, listen, if anyone's going to figure this out, I'm going to figure this out. I'm a tech guy.
For sure.
This thing is silly. How about we just start the Rockstar coin? How about that? You know? And then I kind of went down the deep dive during the pandemic, and I was like, wait a second, this is a bit of an engineering marvel here with this proof of work, and there's a limited supply. And I had never heard of the concept of a limited supply or scarcity in the digital world. You can copy and paste and make a million versions of like anything.
Sure.
So I didn't understand the mechanics on how that was actually managed.
Right.
And then going down that rabbit hole, I thought, holy smokes, like, wait, I've totally misunderstood this. And as a gold guy in the past, why did I not get this?
Right.
So then ever since, it's been, I don't know, hundreds of hours of study and reading and, you know, just deep down into this Bitcoin rabbit hole and trying to figure out what it is. And then it lined up with real estate. It's like, we are not real estate guys because of real estate is like number one. It was what real estate offered us.
Sure.
As the central banks are printing a lot of money, the real estate is more scarce than the dollars. And if we can kind of do a bit of a short play on fiat dollars, you know, borrow 20%, get 100% of the financing you need, you know, put
right.
20 down, borrow 80. It's a bit of a short play on the dollar, really, using real estate as the vehicle to pull off that maneuver. So almost using the banking system to our own selfish advantage. And then we kind of realize, oh, Bitcoin aligns a lot with this type of thinking.
Which you should, because the government doesn't have consideration for the individual citizen when it starts printing all kinds of money. And like you mentioned about savings, right? They're eroding savings for people. So if you have an opportunity that you can take advantage of that, why not? My story in Bitcoin was actually kind of interesting.
So we didn't talk about this. I didn't know you had a story in Bitcoin. Got it.
So I back in 2010 or 2011, I was in New Orleans just after they won the Super Bowl, and I saw a Bitcoin ATM, and I'm like, what is this? I had no idea. And I thought to myself, I remember sitting there and I'm like, I Googled it and I'm like, what is Bitcoin? And I thought to myself, let me take some out of this ATM. Let me try and invest in it. But sure enough, I was talking to my friends in line and they're like, you're like, what kind of BS is this?
Crazy.
Am I allowed to swear on the podcast?
Oh yeah, you can do whatever you want.
All right. Yeah, I just wanted to make sure before I said anything and then I'd get bleeped out. But they were like, you're crazy. Don't waste your money. Nothing will ever happen.
We will save you.
Yeah,
we will save you.
We'll save you. Now I don't talk to those people anymore, just so you know. But I then fast forward to 2017, and I'm driving to Niagara with a friend of mine, shout out to John King. He convinced me in that car ride. He just kept telling me, buy it, buy it, buy it. And at that point, it was like, I can't remember, it was about, $200-300 a coin, something like that. And I'm like, okay, just stop talking, I'll buy it. And then, I think it was at about 22, and I sold, and I'm like, okay, this is it. It dropped down to 3 after that. Like it went on the collapse, and then it went on a historic rise. So I don't know if I sold too early, like I'm not in it anymore. I don't know where it's going to go, but I'm sure, based on discussions, based on research, that I probably did sell too early and I should have held on. But
story of all our lives.
Yeah, it's just, and I'm watching it go up, and I'm like, oh man.
Yeah, FOMO kicks in. Yeah. Yeah, it's just such a new thing. It's cool that you had that ride. Like the fact that you went through that brings you closer to it than most people, because most people just outright dismiss it. That was really your friend. Did your friend who talked you into buying some, did he stay in? He stayed in. He has been a believer from day one, and he's honestly one of the smartest guys I know, way smarter than I am. And that's what I was going to say on this topic. As I study it, some of the smartest thinkers around economics and macroeconomics and money and monetary history.
Yeah.
When they break it down, they come to the conclusion like, wow, I think there's something here. I don't really know what it is. Sure. I don't know where it completely goes from here as measured in dollars. I'm not for sure, but some smart people seem to have arguments for it, not against it. And I find myself, because now I'm a believer, and so I find myself looking for the arguments against it. And over time, I'm finding less and less of those arguments. The biggest one would be the government's, they are not going to like this. If you and I are controlling the printing presses, we probably wouldn't like it if the guy across the street's controlling it instead of us, right?
Makes their own currency and puts fiat out of business, right?
So that's interesting for you to have that kind of thinking. What's your story? I know we are here, and I do want to lead to New Haven Mortgage and everything you're doing there, but what is your story? Like, how do you end up to have even the thought that something like Bitcoin is interesting? To me, that tells me you're a student of economics, or you're studying, money in some capacity. Like, how have you got to your place in life now? Maybe let everyone know what you do right now, and then rewind a little bit and let us know how you got there.
Sure. So I'm the CFO of New Haven Mortgage Income Fund. We're a mortgage investment corporation, and a lot of what we do is lending in Ontario. So it gives you kind of a unique viewpoint or vantage point to how the economy is doing, right? You get a front row seat, basically, especially because in Canada, a lot of wealth is held in real estate. It's one of the biggest drivers of our GDP. I've been in the industry for about 14 years. And over the period of time, I've seen, obviously, the price of housing go through the roof, right? And it's, like you said, I took economics in university. It's a simple supply-demand issue, right? But the unfortunate part is that while the price of the houses are going up, the income relative to the price of housing has not, right? So for me, there has to be the ability to control how much printing the government does. Because, even if you look at the States as an example, right? Every year, it seems like all they do is raise the debt ceiling. They're always at that point.
With some drama, though.
Right.
I like the drama before. Like they're not going to do it. We are going to debate this till the very last minute.
I know. And they hold ransom. They hold it ransom. They basically say, okay, unless you do this, this, and this, we're not going to cooperate with you. And to me, with the rising price of money, and I was listening to a pod on this, the All In podcast, and they were talking about the service cost of the debt, right? One thing people don't consider is the fact that on these trillions of dollars, when interest was low, it was a lot easier to service that debt. But now that the cost of interest is going up,
have you seen that chart? It's starting to hockey stick.
Yeah.
Like the interest now, if you go to the St. Louis Fed, you can Google all this stuff up.
Right.
And it's starting to just go straight up. I don't think on that chart it's crossed $1 trillion a year in annual interest payments.
Right.
But it's going to.
And where does that money come from? It comes from the individual, right? So all the programs that they're trying to create that they've, spent all this time on their election platforms on, that's what they're that's where the money is going to come from. They're not going to be able to do those programs because they simply have to pay their debt down, right? And that, even on a macro level, will go down to a micro level where people spend all their open income basically on trying to service their mortgage debt because the interest rates are so high, the cost of housing is so high, and their income just hasn't gone up. And, multi-purpose rentals is a big industry now simply because people need a place to live. They need an option, right? And they're going to
get smaller spots for their dog. On that point, I think back in 1998, I had one friend tell me that real estate is done going up because we had a collapse in the early 90s and it went down for like 6 years. And then in 98, it had come up a little bit for maybe 2 years or so.
Yeah.
And I had a good friend say, hey, that's it. It's done. Like, don't get into real estate now. It's about to turn, Tom.
Yeah.
Then it's gone on this run from 1998 till whatever, 2017. Yeah. There was a bit of a dip. Now we're going through this thing.
Yeah.
But I remember probably then, and then in around 2008 to 2010, that era, people would say, well, Tom, who can afford these prices? No one's going to afford it. And even back then, Nick and I were of the opinion that it's not that people will be able to afford these things anymore. They will just get less space for their dollar.
Sure.
So when we were renting out properties in Hamilton, maybe around 2007 to 10, there would be a full single detached home renting out for about $1,350 to $1,500. We just had a chat with our team at Western University. A single room for a student at Western just went for $1,300. So we've gone from a world in Ontario where you could rent an entire house in Hamilton, Ontario for between $1,300 and $1,500 a month to a world where in London, Ontario now, $1,300 gets you a room in a student rental.
That's unbelievable. I mean, and the fact is that that's not a quality of living. If somebody comes here with a family, let's say an immigrant, and they need to make ends meet, they're not going to be able to enter the market. The cost to enter in is just too high, right? So you're talking about a family that could potentially be living in kind of a one-bedroom rental almost, right? Versus having access to a house when, back then when it was $1,350,
which wasn't that long ago.
Yeah. And sometimes I forget with COVID, the whole COVID thing, the 2 years, just like I have no point of reference almost because
we've lost it. Yeah.
Yeah. It's
what happened in that 24-month window.
Yeah. Everyone keeps saying, oh, that was like 4 years ago. And I'm like, it was 4 years ago? I'm like, it felt like 25 because you just don't, that time just evaporated basically.
What do you think your parents are like immigrants to Canada?
They actually live in India. So
your parents live in India. For some reason, I thought they were here. You were born there or here?
So I have a strange story. So I was, my parents lived here for 10 years. My dad worked for Pete Marwick or KPMG today. And he qualified as a CA in London, England, then moved here and then worked here for 10 years. Then India's economy started opening up a bit, so he wanted to kind of go back and start his own business.
Oh, wow.
So when I was 3 months old, my sister was 3 years old at the time, we moved back to India. So I grew up in India for 18 years.
What part?
In Delhi.
Oh, cool.
So, and then after 18 years, I came back here, didn't really know what I wanted to do. So I went to Carleton, Last Chance U, as they call it.
At the time when I was going through, that was last chance.
Yeah. So but I figured it out. It took a couple of parties, and then I figured out my way. And you
got to get that out of your system.
You do, and I think it's one thing I don't like about the education system sometimes is you're expecting an 18-year-old to make a life decision on where they're going to end up, right? When they don't even know who they are yet, right? So, it was the hardest thing I had to do because I'm like, I have to pick a career. And, I picked something, I didn't like it. And then I ended up, going back out after university, trying to figure out what I wanted to do. And my dad, like I mentioned, he was a CPA. He's like, oh, do your CPA. And I tried my hardest to not do it. But unfortunately, I ended up doing it anyway.
It sounds like it was a family bloodline thing. It was going to happen.
Yeah. He said, you're going to need something to fall back on, right? And he was right. It does definitely help shape a career. And I'm fortunate enough that I got the exposure into real estate because it actually ended up being something I really wanted to do. And I didn't really, a lot of people don't, back then, maybe about 15 years ago, like you mentioned, people were talking about, oh, real estate is capped out. There's no industry here anymore. But I'm fortunate enough that, my mentor, David Viner, he brought me in and, I got exposure to the market and I said, this is really interesting.
And that's one of the founders of New Haven Mortgage?
He is, yeah. He unfortunately passed away in 2016 from a brain tumor, but
oh, wow.
One of the smartest guys I knew, and he really set up kind of the foundation for what New Haven is today. And, the vision that we're living out was a lot of what he wanted. And unfortunately, he's not around to see it. But, every time I do this or I talk about New Haven, I can't go without, giving my props to him because without him, New Haven wouldn't be where it is today. And without him, I wouldn't be where I am today. Right. So,
life's weird.
Life's weird,
right?
And
things like that happen. I mean, it's someone lives their whole life, and you've I don't want to use the word benefit. I don't know what the word is. Like it's helped you through your life, what this other person has done.
Yeah.
They're no longer here and you want to honor them and their memory. It's just, yeah, it's a delicate thing.
And people always say, you know, like, and he said too, I remember him saying, you know, I have time, right? And one thing people don't understand is that time is a relative concept, right? It's like, you can have time, or you think, you know, you'll do this tomorrow, you'll do this the day after. Like you had mentioned, you bought that house in Croatia, right?
It's a condo. Let's not oversell it. It's a condo.
It's a house, guys. It's a 15-bedroom mansion in Croatia.
We have a villa. We have 3 yachts that pull up.
Yeah. But the Sultan of Brunei comes and spends time there, right?
We're like this.
So, you know, the funny thing is that you did something that I hope one day I'm going to do, which is also, you know, your background is Croatian. My background is Indian. I hope that I will have a property there too for my family and my kids to go back and be in touch with the culture there, right? I think that's...
Especially now with India, I feel like it's just on a tear. The population of India just passed China as the most populous country, I believe, in the world just like a month ago. The economy seems to be opening up. I saw a picture of some parliament type building that they just built in one of the cities. I don't know if it's like with capital or if it was for just one city. I don't know the details. Beautiful, like a stunning thing. You just can feel the energy coming from there right now. I have a question for you.
Sure.
Obviously tons of people from India will come to Canada right now. And we talked about this briefly before we started recording. Are we just selling them a bit of a bill of goods, like I had mentioned? Like we're kind of selling this idea of Canada through its education system. We get a lot of students here. Sure. I think we put on pictures of the Rocky Mountains and like, hey, here's this stuff. But I almost feel like we need to have a little bit more clarity as to what the reality on the streets here are when we're bringing people from other countries in. What do you think about that?
You know, I do think it's a little bit of a sales pitch almost.
Feels like it, yeah.
Yeah, it just feels like, you know, you're selling people on the Canadian dream and they're spending all kinds of money to get here. A lot of people are spending their family life savings because unfortunately there's a lot of people who take advantage of people who are immigrating to Canada, right? There's actually recently in the news I read about a scam, the student scam. I think they deported 800 students who
I saw that briefly too, and I don't know the details.
Who signed up on this like fake, you know, admission forms that they all moved to Canada and then they got sent back. And the amount of money they probably spent to get here, including paying the middleman, quote unquote, to get here is incredible, right? And then they get here, if they do, if they're, you know, not, and I don't want to say lucky enough, but if they make it here, it's, you know, they get through university and where are the jobs? Where's the opportunity to make that, especially in this economy today, right? Where a lot of people are laying off, you know, staff. There's not a whole lot of opportunity like there was maybe 10, 15, 20 years ago.
Why do you think Canada as a country, I haven't prepared you for any of this, I'm just curious on your thoughts. Canada as a country, we're so dependent on the real estate market and we can't seem to get that business investment and innovation and tech aspect of our GDP ramped up. You have any thoughts on that?
I think it's more just government investment too, right? I think the government is secure in the real estate market, right? And developers complain about this a lot. They say that governments, you know, there's 5, 6, 7 levels of development charges to make a development. And, you know, obviously, like I'd mentioned before, the multi-purpose rental, right? We're dealing with some city councils who are not developed enough yet to understand what opportunity they may have in the land around them. So, you know, the model for the Canadian government is to get kind of the taxes from this. And, you know, in tech, it's not as mature a market yet, right? We have had a lot of companies move here, like the Googles of the world. Amazon has moved here too.
But typically ones that have started elsewhere and try to take advantage of maybe a cheaper labor because of a currency arbitrage. Healthcare is paid for here. So they're kind of leveraging some of the benefits of Canada to their own advantage. And I'm not complaining. I was a beneficiary of that. I worked for Oracle and NetSuite. But it seems like homegrown stuff is a little weak right now.
Sure. And you also look at even stuff that comes from America that doesn't work here on the business model. Look at Target. right? Target came to Canada full blast.
Yeah.
And they just didn't build the right business model to survive.
You're right. Nordstrom too, I think, just closing down.
Yeah. So, in Canada, it takes a very specific business model. You need to understand the taxes. You need to understand how the systems work, how to get the best out of your employees in a different environment, right? People are less likely to settle for stock options here, as an example, in the tech industry, right? They want that safety net. But as time goes on, Canada will have no choice but to invest in these markets, because you have a rising population, and as technology improves, a lot of the jobs that people relied on before are being replaced by technology. I mean, take a look at ChatGPT. You can basically do anything with that almost.
We use it in here all the time already.
Yeah. That technology is wild, and it's scratching the surface of what they're actually capable of. Because keep in mind, that's the free version they released. Imagine the version that they're probably working on behind the scenes, right?
Well, I just had this weird thought the other day. I was playing around with Midjourney. Midjourney is the AI that will do graphics for you. I don't know if you've played with it yet, where you can type in text like, give me a picture of someone on a beach in Croatia with a sunset with mountains behind them.
Is that you, or is that anybody else?
Yeah, no.
The Sultan of Brunei, right?
Yeah. It wasn't a picture of me. I was just monkeying around with it, but it could have been. But it'll if you haven't seen this yet, you got to play with it. You just type in basically anything, and it will give you the graphical rendering of it, and then you can enhance it. So and just in the last 3 or 4 months of playing with this, the development of it is incredible. But then the other day, I was trying to make a meme to bother one of my friends.
Yep.
And I couldn't, I'm not good with graphics myself, but then I thought, why don't I just go to ChatGPT? Because I don't understand the prompt to give Midjourney to make the meme for me. And so I put it into ChatGPT, and unfortunately it said, I don't know anything past the year 2021 or whatever it said. So I don't know what Midjourney is. Yeah. But then here's a prompt for someone to create what you're talking about. So it almost gave me a description that I could submit to a graphic person on Fiverr or online somewhere. It was the most beautiful description of a little project that I could take from ChatGPT, 10 times better than I would have described the Canadian real estate market, the funny parts of it, the sad parts of it, and how to explain it to a graphics person who maybe is not familiar with it, for them for details on how to create this meme. So I was just I'm like, holy smokes. But then if it did understand Midjourney, and I could just go to ChatGPT for the prompt, then put it into Midjourney, all of us are now like video creators, producers, directors.
But you look at how technology, I mean, at one point Wikipedia was that page, right? You remember? Where everyone was just copying and pasting Wikipedia articles?
Yeah.
But it's incredible how we thought we were reliant on technology, but with the power of AI and technology, I think that people will become more and more used to kind of doing their own thing, right? Will become more individualistic. They talk about these societies where, you live in one building, you have a gym, you have restaurants, and, there's a workspace, right? And you become, your own business person, essentially. And
I had a flashback to the Borg. I don't know if you watched Star Trek.
Yeah.
But the Borg is just this big thing with all these humans connected to each other. Yeah. That building just that, oh my gosh, we're all just connected into the internet.
It's funny. Have you seen one of my favorite, I think, Disney or Pixar movie was WALL-E?
Oh,
you ever seen that?
Yes. Yeah.
So, that's kind of what I imagine that society will become like eventually, because we'll just be sitting around doing nothing and let technology basically guide us around.
Oh my God, we are in the Matrix. We are in the Matrix. We are building the Matrix for ourselves. That's the sad part.
We are. Yeah. It's
so Canada's, I guess you're basically saying, listen, Canada's going to get on board with this trend because out of necessity. It's just going to be forced into it.
I think that no matter how much we try to avoid technology, it's going to end up catching up with us, and we're going to end up having to use it in day-to-day lives, right? And we already use it. Just our reliance on it will just, exponentially grow as, these tools start coming into the workplace. And, you know, you imagine we used to, at one point in our lifetimes, go to a library, look up a book.
My university experience was that. Take books out of the library.
And then, like, you know, have to manually reference it properly and make sure that we didn't. God. Do you remember that?
You would, like, lose marks if you didn't, like, properly source your information. Like, remember, you had to underline things and quote things and the page number.
And at a certain point, you're just like, okay, I gave them credit. I'm telling you what page it's on.
How am I losing marks if I didn't underline the book title properly or something?
And then you just think about that. That's just this generation will never have to, like, do that manually again. Right.
I was describing this to my daughter, like that her mom and myself, we met at university and that we would hang out in the library and because we were having to take out books and I was explaining microfiche. Remember like the old stuff back then? You had to get it like, if it was old back then, the current stuff was at least a book.
Right.
But if it was old, you kind of had to go to this thing called microfiche and it was like this flimsy paper and you put it on this machine.
Like the newspaper articles.
Yeah, the newspaper articles and you were and if you had to find something, you might spend all day going through 2 years of newspaper articles trying to find some information.
Sure.
Whereas now you punch it into Google or ChatGPT, it'll give you the beautiful summary of the information.
Right.
And just for her context of that, she's like, why did you do that? Like, why were you doing that? Like, she had no frame of reference to understand why would we even do that?
Yeah, it's not even a concept right now. It's just, it's so far-fetched that you'd have to go in and start manually, you know, finding information when you can just, Google has just changed the world, right?
I can't figure out the exponential curve on the change of jobs in this economy. Like, if you just look at Toronto the way it is now, like, we're obviously, I mean, if you look at our business, our marketing team is highly leveraging ChatGPT, artificial intelligence. For example, this podcast that we're recording, let's say it's going to be about an hour. We have an AI tool in here that actually my son who's with us will, for the summer, will use it. He will give it to the AI algorithm. It will listen to you and I for the whole hour in 10 minutes and give him 4 or 5 clips of our discussion it has detected our separate topics based on inflection in our voice and wording. And so it will listen to 60 minutes in 10 minutes and give you a bunch of clips that you can use on social media.
Right.
So that work has been compressed. In the past, he would listen to it for an hour and then make notes on sticky notes to where to edit different topics, then go into video cuts of this, have to caption it. The AI, by the way, will also caption our discussion. And all of this in 10 minutes versus what would take him an hour of listening plus 2 to 3 hours of video work. So we're taking about 4 hours and compressing it to 10 minutes.
It's
like, how, as a GDP, as an economy, how do we even measure that type of productivity? How does the government even tax? And this is, I guess, where my mind goes to, because the government needs an increasing, in an inflationary world, the government needs this increasing tax base just to make its payments. Back to your early point, in a deflationary, highly productive, technology-based environment, how do you capture the taxes on that kind of productivity that is forcing a decrease in the price of things?
Right.
We now don't have to hire perhaps an extra body going forward when he leaves back to Western. We can just use the AI. Somebody on the side just punches in a bunch of these podcasts. How is the government going to capture the economic benefit of that to pay for the inflationary system that it requires to grow and grow with a higher? We're both in real estate. The debt load must grow.
I think eventually at some point, like a lot of the services that we pay for, like let's take power as an example, right? I think those are just going to become free as technology increases. So, you know, we'll have a sustainable form of a source of energy that will last. So if you look at the baseline of people's lives, right, there's going to be a certain minimum baseline that everyone's going to live on, because technology will just force standard of living to be at that level, right? So while there is a lot of work to be still done in that area, and like, you know, you talk about emerging markets like India as an example, right? We are, you know, not too far, but far enough away from the same problems happening in that type of economy versus our economy. But you eventually look at what the other industries are, right? Look at SpaceX, look at where everybody else is going. So we will find a way to find people to work, but I do think that just as technology has done in the past, right? Like, you know, you look back 400, 500, 600 years ago, what was the lifespan of the average human, right? 40 years, 50 years old, right? Now they're talking about even people living up to 110. Now you've got, all these people living up to 110. What are you going to do?
Disaster.
Yeah. Exactly. So you're going to have
all these old people.
So, in terms of the economy, I think it's just a different frame of reference. You're just going to have to think of it differently in the sense that stuff that you paid for or, had to worry about in the past is going to become kind of a baseline standard for people to live because, I'm sure with, biotech that, all the stuff they're working on, they're talking about, they have the ability to reverse aging. So, before we know it, we're all going to be Benjamin Buttons going back the other way. And, with that type of technology, it's incredible what they can do, right? They're going to, find ways to make unlimited food supplies, right? Who knows what they'll do with water, but they'll have to figure out kind of what the next step is in maturation for the economy.
And I guess I agree with it all. And I guess the only thing that's really capturing my interest is that it seems that this is going to happen at an exponential pace moving forward. I don't think it's going to take another 50 to 100 years for dramatic changes for us to see. I really think it'll be like in the next 10 years, we're going to look back on 2019 in the year 2029, we're going to look back on 2019 like, wow, like, what?
Can you believe people drove their own cars?
Yeah, exactly. Oh my gosh. Now you just stumble into the car and say, home. You know what I mean? It takes you home. I mean, we're really close to that already.
Sure.
So, okay. On the real estate side, I'm curious, what are you seeing from your vantage point out in the economy now from, your activity in real estate? I do want to talk about the different things that New Haven Mortgage does specifically, but I guess just at a high level, what are you seeing out there in the economy right now? Are you seeing, we're seeing more power of sale listings kind of pass through. So we primarily work with investors who are buying rental income properties as a bit of a hedge against the inflationary system in which we all live. So we're not used to seeing tons of listings in this brokerage. We more work with buyers who are looking to buy. But we are now seeing some more power of sale type properties pop up. Are you seeing in your line of work any kind of changes that are, raising eyebrows or anything?
Yeah, there's obviously an increase in arrears. I think that's across the board simply because, there are people obviously losing their jobs and affordability of the mortgages are just not what they were, 3, 4, or 5 years ago.
A marginal increase or a shocking increase?
So, and that's where the interesting point comes in, right? Because it's about the lender. So the lender, like if you've noticed, the banks, they've changed their amortizations on the back end, right?
Kind of quietly, let's face it. It's not really headline news.
No, definitely not. Why would they want to make that headline news, right? So there's ways that lenders are now working with the borrowers to kind of avoid those types of situations. But status quo, if everything were to go along with the actual market rate interest, you're going to see way more than what you're seeing even today, right? But the fact is that in our industry, like what we've seen is that we've also had to work a lot more with the borrowers to make situations kind of
palatable
for everyone, right? Because, if we're charging, let's say 9.5% on a mortgage, right? And the borrower can't afford that. They can only afford the 7% they were paying. Would we force them out of their house, potentially, spend thousands of dollars to you're kicking a family. You're kicking a family out of the house. That's also, not something that we want to do. And 3, you're potentially not going to, recover as much money for everybody, right? We'll get out because we focus on loan to values, right? But, what about the borrower? What about their life savings that they put in that house, right? So it's a much more palatable situation if you work with them. And we found that recently, probably in the last month, bidding wars are back. There's certain pockets, obviously, in Toronto and the GTA that, just they retain their value and they're on the uptick. There's obviously still some areas that, just in the more rural markets that haven't really come back yet, right? And, you know, because some of the prices out there, like if you look back,
they went straight up.
Yeah. March, April, May 2022, like you're looking at, you know, spending $1 million out in an area that, you know, nobody's ever heard of before, right? With no houses around. So what's your point of reference for that marketability? It's just the fact that money's so cheap, so I can sell this house for $1 million. So, you know, I've kind of referenced this before in my work, or, you know, what I've seen in the industry is the fact that this next, you know, 4, 5, 6 months is critical, right? And you're going to see a lot of effort made by a lot of the lenders out there, including the banks who keep it quiet because they don't, you know.
I love it.
The stigma. The stigma of the banks is like, oh, they're this great, you know, perfect institution that never make bets, never lose money.
We have the Canadian banks. They're the best. They are the best banks in the world. We're so lucky to have these banks. That's the story. And just for anyone listening who isn't aware, what's happening is some people have mortgages where they're on a variable rate. The banks have chosen not to change their monthly payment. And instead, if they had, let's say, 18 years left on the amortization of a 25-year original amortization period, they've said, okay, your payments are not sufficient enough to make interest and principal payments to correct this because rates have risen. We're just going to extend the amortization. So you actually don't have 18 years left. You actually have 32 or 36.
Right.
We've seen 40. The highest I've ever seen a screenshot of, so I didn't see this personally firsthand, was 90 some odd years. I think what happened is before rates went up. So they had no equity in the property at all. I think it was a brand new mortgage.
Was it fixed?
It was a variable rate mortgage, I thought.
Yeah.
That the rate wasn't changing, and they were just a month or two in.
Right.
And then rates just went straight up for like 6 months there. And then they had this screenshot that it had gone up to like 90 some odd years.
Yeah.
Don't quote me on this one.
No, that's
like a screenshot thing that just shocked me when
I'm trying to find the fixed 90-year mortgages.
Get the fixed 90-year mortgages. Yeah.
Well, and the States does that if you know, they do their 30-year periods.
Japan, I believe, has 100-year mortgages.
Yeah.
It's this game that the banks are playing. I think it's going to be something we see in Canada. I think it might be a federal election thing too. Let's make it affordable for new first-time home buyers to buy a property. Under the covers of a beautifully marketed name will be an amortization period of maybe 60 years or something, but you can see it coming.
Oh, definitely. And I think, you know, again, like you look at the institutions, the banks, and you look at the government, you know, you look at how these situations happen. But, you know, in 2008, our banks got bailed out too, right? Nobody talks about that. And the government, I mean, like, just look at the Eglinton Rail. If you want to look at that project was billions over budget, right? Think about where those billions could have been spent to help people, right? And they're still building it. Like, there's still construction on Eglinton, which is crazy, right? So, you know, you find what's going on out there. There's going to have to be a shift in not only government thinking, institutional thinking, but everyone's thinking to kind of work more with the individuals to keep the economy, you know, in check, because you can't keep spending endlessly. Like we've said, you know, you keep printing money to bail you out of the situations that you created in the first place.
So are we the guys that I referenced in 1998 and 2008 that told me the housing prices couldn't go up further? Because I'm with you. Like, I'm with you. We can't keep doing this. But then my mind goes to, okay, are we now the older guys who say this can't keep going? No. And they just extend amortizations and like let the debt fly. And it's just about the monthly payment. Who cares about paying off debt? And let it ride.
I think the housing market is cyclical. I think we're just, you know, at a down point in the housing market. I think it will go back up. I think the demand to live in a country like Canada, or in Toronto specifically, because it's, you know, it's milder weather compared to like an Ottawa, right? And you're still living in kind of the financial capital of Canada, right?
Fair, yep.
So I think that the housing prices will go back up in a period of time. I think the Bank of Canada will have no choice but to decrease the interest rates because, you know, that last quarter point, they said the economy was doing too good, so let's push it back a little bit because inflation increased, right? I think that the Bank of Canada will have no choice because something's got to give, right? You can keep pushing the interest rates up, but you're going to push us into a recession where, you know, everything will collapse, right? or you can start balancing the economy a little better, which they should have done during COVID, right? If the Bank of Canada had used any intelligence whatsoever, right? They could have seen that, oh my God, this real estate market is crazy. It's out of control. How in a pandemic are properties, increasing 20, 30, 40, 50%? Well, hello, the cost of money is almost zero, right? So if you want to balance out the cost of money, when you see an incredibly hot market, start raising the prices then.
The time that just drove it home for me is they had not started raising rates yet. I think one of the newspapers said Bank of Nova Scotia was saying they're going to raise rates like 9 times. Like that announcement had been made, but nothing happened yet. And I remember parts of our team had taken time off over the Christmas holidays or the holiday season in 2021. And then, so, end of December, they go away, kind of no one's doing real estate stuff. Right. We all kind of come back and start chatting again. And this is maybe second week of January, third week of January, people see each other again. Sure. And everybody started freaking out because they looked at the real estate prices. And by the start of December 2021 to January 2022, prices, this is going to sound insane, but prices in some properties had gone up 30%.
Yeah.
30%. Like everybody around here was like, I don't even know what to offer to have a chance at getting these properties. And the Bank of Canada came out, and it was January of 2022, and said, we're not raising rates.
Yeah.
And that's when I thought, okay, they don't have a clue. Like if you don't raise rates now, and they began in February, to be fair, they did start the very next month, but I thought if you're not starting now, what are you what are you waiting for?
Well, and one thing we did at New Haven was we stopped second mortgages and we cut back our LTVs.
You did. So you saw it.
Yeah. We basically, we saw the heat in the market, and we were partaking for the first couple of months. And then we were just like, hold on a second.
Happening?
Yeah. We're like this.
My spreadsheet is broken.
Yeah, exactly. It's like, you know what? Numbers should not be like this. Right. So, we cut back our LTVs. We started adding more restrictions. I mean, a couple of months we closed almost single digit deals, which is wild. Right. But it just didn't fit our underwriting criteria. And we're thankful we made those changes because, there are other funds out there that are taking, 6-figure losses on properties because, you're lending on a $5 million property and, you're going up to 60%, but the property
it's really a $3 million property.
Yeah, it's really a $3 million property, right? So you're underwater. So you're going to take the hit, right? And, one thing that is important in real estate is diversification, right? Prior to COVID, there were funds that they didn't diversify as much. So they bought one big commercial property. And they put all their eggs in that one basket. And sure enough, COVID hit. And what happened to commercial properties during COVID, right? No one could pay rent. There was no clients. There was no customers. You're not getting any income from that property. You're sitting with a large, $30 million plaza on your books.
Smokes.
And you're stuck. So, funds like that really struggled during COVID. But it's also about kind of understanding what market you're in and adjusting to it prior, right? And keeping that diversification model up because, let's face it, stuff like this will happen again, right? There's going to be cycles in the real estate market. It's inevitable. So you can just do the best you can with your investment strategy to make sure you're as diversified as possible. Like you yourself, you said, you guys have multiple properties that you deal with.
And,
right?
And we tell everyone, real estate, you get in and then you hang on for dear life and try to survive.
Yeah.
It's not, people will always come to us and say, well, I'm trying to time the market, Tom. I'm not going to buy right now. I'm going to wait until there's blood in the streets. And I'm like, well, if you wait for that moment, the reason that situation exists is likely because the banks are not lending. So if you want to buy at that time, you better be a cash buyer.
Sure.
Because you're probably not going to be able to go to the banks and get financing because the reason things are just horrible are because credit is seizing up and it's expensive and stuff. So you have to really have wits about you to carry through with your belief. And then at the top of the market, people don't want to, some people are like, I'm not going to buy now because it's the top of the market, which is fair. Right. But then I'm like, well, when are you ever going to get in? So sometimes you have to run the numbers like you're saying, and then you get in and hopefully you've done enough due diligence that you know what you're buying and have enough liquidity to survive the ups and downs, and then you just survive the roller coaster. Because that to me is what real estate is about. It's more about timing the market and survival than picking the absolute perfect timing of the market.
Well, yeah, and you look at the cycles, right? Everyone who's being hurt in these cycles are the people who over leverage themselves, right? It's not the people who have properties. Like, I know plenty of people who have 10, 15 properties in their books, but they've controlled their exposure on each property. Yeah. So, sure enough, you can buy, buying a condo right now downtown, right? How do you service that? Tough. How do you, rental income is not going to keep up
with
the
condo fees and
property taxes, you're underwater every month, right? So if you're going to make an investment like that, you have to do the numbers and make sure that even if you're underwater, you can, kind of stress test yourself basically, right? And, like you said, timing is everything. And some people get lucky. Some people
don't, and then you seem like a hero when you get lucky.
Yeah,
and then you feel like a zero when you don't. I mean, really, my first family home in Mississauga when we got married was a 4-bedroom, 2-car garage home for $268,000. That when I signed the papers, I looked over to my wife. I'm like, well, listen, somebody has to buy at the top of the market. Yeah. Might as well be us.
Yeah,
at 268, because we had friends about a year earlier bought basically the same house for like 225.
Right,
it was a Mattamy home. So I thought, well, 268, on a percentage basis.
Oh, you got ripped off, buddy.
I'm getting hosed. Yeah. I'm a family guy. We got to do this.
You can't even get a closet downtown for $268,000.
Yeah. So if I had just bought the street, when I bought that house, I don't know, I'd be living in Croatia with
with the Sultan.
With the Sultan.
Yeah.
But we're all. It is a difficult game for sure. I'm curious. So your role at New Haven. Because I'm new. We've met through a mutual friend, Darcy.
Yeah.
Who are your customers? Can you map who do you guys work with? What are the products? What's your market fit here?
So
map it out for someone who isn't familiar.
Yeah. So we operate a fund, a mix. So we have investors that invest in our fund that are primarily high net worth individuals. We also have institutional financing from TD, and we take those funds and we lend them out to first and second mortgages around Ontario. A lot of our borrowers are newcomers to Canada, people who are kind of rehabilitating themselves, trying to get back to the trust companies and then eventually the banks, which is kind of the promised land of where they need to be. And on top of that, we also have, people who have unique situations, right? So I'll give you an example. We lent to my real estate agent, who he bought a house in Toronto. He wanted to buy the house next door, which was in shambles. And, this is in Leslieville, so it's a nice area. And he didn't tick all the boxes because as a real estate agent, you're self-employed, right? So
it's horrible. You finance guys hate all self-employed people.
Yeah.
Self-employed? Tell me a little bit more about what you self-employed.
Yeah.
How much money did you make?
So what kind of drug dealer are you exactly?
What are you doing?
So self-employed people actually come to us a lot because, they'll have unique situations. So he bought the house next door. And this is probably one of the best investments that I've seen. The guy he bought a new car after. So he bought it, renovated it, sold it at the height of the market. Well, he sold it in 2021. So the guy, he went to Hawaii got married, bought a new car.
These are the stories we love to hear.
So it's people always assume that it's the worst type of borrower that will have to come to us. But that's not really the case, right?
Yeah, I had a dentist friend who couldn't get financing to expand his, I guess he needed a bunch of dental chairs and these things are expensive apparently. So he had to go to private, or like a MIC to get some money because the banks were just turning him down. Because he wanted to expand his practice and he had no other source of financing. So that saved him.
And one of the unique things about private financing is the fact that you can look through and understand the story, right? It's not just a tickety.
So that's how it is for you. You guys will, joking aside about self-employed people, you will say, okay, tell me more. Your story. What is it how are you making money?
Right.
Why does your tax return look like this?
Right.
Tell us all the dirty details.
Exactly. And you got to understand, what the liability is, as an example, HST, right? Mm-hmm. How are you dealing with your HST? Because that's always a common problem for self-employed people. It's just, oh, I filed back in 20.
I'll never forget when I first got my real estate license, because I was an employee before. It was all handled. And then I was getting commissions, and I didn't realize the HST was included with this.
Yeah.
The first time my accountant's like, okay, well, you have to pay this much in HST. I'm like, what?
What is
HST?
that?
What are you talking? I had a heart, like your heart just sinks. My stomach was dropping. I'm like, I don't have that money.
Yeah.
It was a horror show.
You just spent it on the $268,000 house in Mississauga.
Yeah. I spent it on just macaroni and cheese trying to survive. But ever since then, that was the impetus for me to make a bank account, and then rename it online banking taxes.
Yeah.
And then every time money would come in, a simple little thing,
right,
changed my entire life. Money comes in, just take that little piece, put it over there because it's not mine. Yeah. I hated doing it, but it changed our lives. But anyway, so you dig into this kind of stuff.
Yeah, we do. And I think that, and I'm sure a lot of your investors, when they're looking at, the type of properties that they want to lend on, right? They look beyond just the income and credit. They try to understand what the story is of the person, right? And especially now, because people are coming up with more and more unique situations. Investors, they need options, right? If they can't, continue to go the banking route, they need, an option that will give them what they need. That's a reasonable at a reasonable cost. That's not 16, 18%. And you'll see that on the. So
you're in a tough spot because you kind of have to look through the smoke a bit to see if people are telling you the truth. Like I'm sure you get fed a lot of stories that just are not completely truthful. So you do have to, because you're lending out hard cash here. You make a mistake, the consequences of that can be devastating.
But the counterpoint to that is that we look at equity,
the collateral,
right?
Yeah.
So the counterpoint is our basis for creating this company was always equity-based lending. Equity-based lending as on its own will not exist come in the future because FSRA is now regulating on the consumer side. They're protecting consumers more, right? So, brokers, mortgage brokers, they need to look more at suitability. They need to look at, is this the right product for the client? Right.
Whereas you can look at how much net worth somebody has and use that in some of your.
Sure, that's a consideration,
okay, but the banks generally don't.
Yeah, the banks will lend up to like 90% on properties, right? We don't like to do stuff like that. Like our weighted average is, we have two share classes. One is a more conservative share class, which is up to 55% LTV. That returns about 6%, but it's basically like, lending 55% on a property's value, you're in a relatively very safe position, right? And we have a second share class that, is up to 8%. That can go up to 80%, but our weighted average is about 66, 67%.
So you guys are, I would call that fairly conservative in how you're lending.
Yeah, and if you look at that, like I'd mentioned last year, we did, one of the months we did 7 deals, right? Because we just couldn't find the right deals that made us comfortable to be able to lend money out on that. But at the same time, we had pulled back on second mortgages, which now we've felt comfortable reintroducing, but we have a lot of caps on what qualifies for a second. LTV, loan amount, the loan amount in front of us, because that's always a very important consideration. And max amount. So
sorry, the loan amount, like the absolute dollar figure of the loan amount.
Correct.
Oh, yeah. Because you're just assigning more risk if it's a higher amount.
Oh, absolutely. Because as a second, what if, let's say the first goes into arrears, your job is either to pay that first.
Oh, got it. For you to recoup yours, you got to take out the first.
Correct. Yeah. So you don't want first in front of you of like $2, $3, $4 million.
Sure.
If
choose too much capital.
Yeah, you're gonna, and plus, like you'll likely, if the first is in arrears, you're going to be in arrears as well, right? And what we saw, in the last 3-4 months is a lot of seconds got wiped out because, they leveraged up to the sun and they got burnt, basically. So, there's so many, like real estate, as I'm sure you know.
There's so much nuance and complicated. To your comment just a few minutes ago about equity-based lending kind of going away in Canada, can you talk more about, you just think that the regulations are not going to allow for lending where you look at
Just the property value. Because if, let's say...
That will just be regulated away.
Yeah, I believe so. I actually have a meeting with FSRA next week that, we're going to talk about a lot of their supervisory approach to the industry. And basically what they're talking about is essentially, you have, take someone's grandmother as an example, making just a pension income, right? They have $1 million house and they want to take out it's free and clear. They want to take out an $800,000 mortgage on that. Now, true equity lending, 800 is a little aggressive.
Yeah, let's say 600.
600,
yeah.
Right? But true equity lending, that'd be a no-brainer. But you look at the debt.
Yeah, can that be supported?
Can that be supported? And one problem that people get into, and especially in last year, is a lot of people prepaid their mortgages in equity. So what they do is you lend up to 65. 5% of that is actually prepayment for the year. So, when the renewal comes, guess who's in trouble? The person who is making a pension income that has no idea that they're
so in that business, a lot of it could be predatory. You could get a lot of people in the market, which I'm sure you see and know this stuff maybe more than I'm exposed to, but a lot of people can get taken advantage of.
Definitely.
Yeah.
And now one good thing about technology, right, is the fact that, people have the ability now to look things up online. Back when, 10, 15, see, again, I have no point of reference. When I say back when, I don't know what I'm talking about. Am I talking about 5 years ago or 30 years ago? I don't know.
Yeah.
But
5 years ago does feel like literally, like you said, 25 or 30 years ago. Yeah. So much has happened.
So back then, people didn't have as much access to information. There's a whole bunch of, new products out there that allow people to look these things up and find the best mortgage for themselves, because they'll need to do research, right, as a borrower, right? And even as an investor, you should be doing your research on people, whoever you're working with. Obviously you guys have a pristine reputation in the industry, but not everyone is so lucky to work with you, right? So
thank you.
They're going to be...
I feel like I have to pay you now for the...
Yeah, $20. That's all I need.
Oh, is that it?
That's it.
All right, cool.
That's it. All I want is Tim Hortons for the ride home.
I got a gift card for you at the front.
Oh, perfect. That's it. But people are not so lucky on the investor and borrower side to be, one, put into the right mortgage, and two, having the right mortgage. And that's something that FSRA is really working on right now. And it's not just for the borrower protection, it's also for the investor protection.
So overall, it's good. It's good that they're working on this.
Yeah, it is.
Because I usually hate regulation, but this is a situation where the regulation seems to make sense.
Well, yeah, and you look at the private market in general, it's grown in billions of dollars.
Yeah,
it's still a speck compared to what the banks do, but at the same time, you've got a lot of people in Ontario that kind of depend on this type of lending, whether they're self-employed and they don't tick all the boxes, but they shouldn't be put in a mortgage first of 12, 13%. That's not fair, because that is not the most suitable product for that client. But, if the broker, say, has a relationship with the lender or whatever it is, the broker will be more inclined to send that deal to that lender. So a lot of the regulation coming in is about kind of making sure that there's at least some work put in. Now, it's obviously not a perfect science, right? Because a lot of the lenders will have a related brokerage to themselves. So how is that lender going to say, okay, I've got a deal in here, we're not the best option, so we're going to take it to another lender.
Ship it out.
Right? Yeah. There's a line there.
So I guess from listening to you, I guess you think there's a bright future for going forward for private lending. It's always there's going to be a need for this.
Absolutely.
Going forward, probably a growing need as just the economy. It feels to me like the banks are going to move so slow that they won't understand some of these new self-employed people and their incomes. Private lending kind of steps up to satisfy that need in the economy.
Absolutely.
We need some more regulation though, perhaps around this. But then with technology, I feel like it's going to make your life easier.
Sure.
Because I don't know, maybe someone is a self-employed Uber driver, for example, and you'll be able to see their Uber revenue in real time. Whereas before, a self-employed person, you could just like say that, you know, it was difficult for them to always prove their income.
Sure.
But now with technology, they might be self-employed and they can directly prove to you their income.
Sure. And it's about corporate social responsibility too, right? So it's on the lenders to look at the fact that you have a situation here where, you know, you need to give the person the right option, right? Because society depends on it, and it'll correct itself eventually.
And it plays to your advantage. If you do the right thing, your reputation increases. It's just better business.
Sure. And, you know, we've we rebranded probably about 3 years ago and started with this whole good lender image, which, you know, is kind of trying to remove the stigma away from the private lending side. And basically we cut our fees back. You know, we've, you know, tried to focus on transparency where, you know, what you see is what you get, basically.
Got it.
And those are just, you know, things that I think are no-brainers that will eventually become standard.
So what you mean is like no extra fees that weren't explained up front and that kind of stuff?
Yeah, like as an example, a percentage fee on discharge, right? So, you know, to discharge a mortgage, you get charged, you know, like a 4-point fee, right? Now, it doesn't seem like a lot, but it, like on $1 million mortgage, that's a whole lot of money, right? So just stuff like that, right? And I think that as the industry matures and people kind of, you know, follow the regulations, just, you know, the same way in 2008, regulators put all these restrictions on banks, which they then loosened up, and then we had Silicon Valley happen. You know, there's always a balance, right? You're never going to strike that perfect balance because you always try, and regulation is always behind innovation. And then when regulation catches up, innovation is
10 times
ahead, right?
Wild times.
Yeah.
Arjun, I appreciate, you know, we were just getting to know each other. So, and I guess I should say everyone should know that we're just learning about each other here. Yeah. So, you know, if you're going to go and do something with New Haven Mortgage, do your own due diligence.
Absolutely.
Check it all out. But I really appreciate you sitting down and sharing this stuff.
Yeah.
We dragged you all the way from Markham to Oakville to do this. So really, really appreciate this. Anything else that you want to share about New Haven specifically that we haven't covered that comes to mind?
No, just, I mean, you know, we talk about investment opportunities, right? So if you invest in a MIC, and, you know, this is not a pitch for any MIC, but there are advantages and disadvantages to investing in any type of real estate, right? So depending on the type and the level of investor you are and, you know, what you look for, an option for a MIC may be a good option, and there are plenty of MICs out there. Do your due diligence on all of them. And, you know, I'm not trying to promote ourselves, but I will shamelessly promote ourselves. I think that we have a great management team, you know, from Jason Viner, our CEO, Katie Fulford, you know, our manager of operations. We do a lot of good work, I think, in the industry, and I think that we will be a viable option for an investment. I'm not saying we're the only one or the absolute best one, but I think we do provide something that investors can look towards and feel confident that their money is in good hands and invested properly.
Now I have a question. Do you ever work with investors who, you mentioned that realtor who did that. So I guess you do some lending on projects where someone says, hey, I see an opportunity here. I need some money. I am going to tear this down and rebuild this. So you do those kinds of, or not really?
Not really, okay. Because, you know, it depends on what type of renovations they're doing.
Yeah, okay.
That's right? Because if it's down to the studs or it's like a complete tear down,
collateral,
we probably won't do it unless there's enough equity, depending, right? Like, but, you know, and we've added more restrictions, obviously, as underwriting has become more complicated. But yeah, I mean, there's a lot of opportunity out there working with, you know, great people like yourselves. And I'm really glad that I made the drive out here.
Oh, cool. Well, thank you. Remember, life is short. So you have to get that property in India, and it's not too late to get back on the Bitcoin bandwagon. Okay, life is short.
Yeah, I got this right here. It's right.
Somebody gave me that as a gift. I don't even remember. But some people who don't know Bitcoin, they think it's a real Bitcoin. I'm like, no, this is not.
All I ask is you put in a good word with the Sultan for me.
Yeah, okay, that's consider it done.
Appreciate it,
Arjun. Thank you so much. The URL for someone to reach out to you guys. What's the best place? Hit the URL.
The website, and we're on social media, on LinkedIn, on Instagram, and Facebook. So you can find us. Just Google us, and you'll be able to see us.
NewhavenMortgage.com. Cool. Arjun, thank you so much.
Perfect.
Appreciate it.
Pleasure.
Thank you.
Thank you.
Hey, thanks for tuning in. You can find every new episode of the Your Life, Your Term show on all the major streaming platforms. So Spotify, iTunes, Google Play. And if you'd like to get free copies of some of the books that we've put together, like these right here, or some of the reports that we've put together, like these right here, you can find all of those at www.rockstarinnercircle.com. That's www.rockstarinnercircle.com. That's it for now. Until next time, your life, your terms.